So here's who really stands to benefit the most from the Reserve Bank of Australia's rate cut in Australia yesterday. And you'd be surprised it's not who you think. It's not you or me. Plus, we cover everything you need to know about financial markets today. My name's Jessica Amir, a market strategist here with Mumu. It's great to have your company on this 21st day of May. It's great to see you. Oh, snap. American shares snapped their 6-day win streak. We saw the major US indices overnight close in the red, and that's basically because investors are now awaiting clarification. We're awaiting for the next nod and validation for equities to keep on moving up. Basically, we're also awaiting, going back to that clarification point, we're awaiting news on where tariff negotiations are at. So the rally to this point has been fast and ferocious, so it's only normal that we see profit taking ahead of major economic releases. It's only natural, just in case we do get an upset in sentiment. Also consider that we've seen outstanding gains. Let's think about the NASDAQ 100, the biggest 100 tech stocks in the US. It's up 27% from its April 7 low. The S&P 500 up 20%. Hong Kong's market also doing really well in a bull market, up about 22%. Down under, our little Aussie battling Aussie share market is up 14%. In terms of some big standout overnight moves that you need to consider, I guess it's important to focus on a couple. So let's just pay attention to those. One of those being Tesla. Tesla was the only mega cap gainer overnight, and that's really on the back of several factors. Not only Elon Musk has confirmed that robo-taxis will be on the road in Austin in June. Secondly, the founder of Tesla also confirmed he'll stay at the seat of the helm for 5 years. In other moves overnight, really important to note that vaccine makers popped higher. We saw Moderna climb about 6%, and then we saw Novavax also follow higher as well. And there's a couple reasons for this. One of those being that the FDA, the Food and Drug Administration in the US, basically outlined a path forward for COVID shots to potentially gain another leg up, particularly for those in the vulnerable ages of over 65, are basically saying there is a renewed need for COVID vaccine. Now, the other, findings or the takeaway from this is that what actually happened was that this was viewed better than expected. It took the market by surprise. So now we've got some traders diving into these vaccine makers, believing that they are headed for higher ground. But it is worth noting that the entire healthcare sector is the only sector in the US that's down this month. So that's something to note. Let's think about other markets now. Well, we've got bond yields basically moving higher in the US, and that's probably another reason why we're seeing US share gains basically have a lid on them for now. But it's also worthwhile pointing out that the US dollar has slipped, and this is a win for gold to potentially claim some runs on the board and potentially rebound. That's probably why gold has nudged up ever so slightly overnight. So do keep an eye on those gold stocks down under that have lost a lot of shine so far this month. Let's just cover some of those. Now, Westgold this month has seen the biggest drop out of all the ASX stocks in the Aussie share market. It's down about 14%. As we said, that's the biggest pullback out of all the ASX 200 stocks. But as we can see, following suit, we do have some other gold plays that are down in the doldrums this month, such as Bellevue Gold as well as Capricorn Metals. So just on the back of the lower US dollar and higher gold price, you might be expecting some of these gains to be recouped. What about the broad Aussie share market? Well, while we're seeing the US stuck at the amber proverbial light, you might say that the Aussie share market gained a green light to rise up after yesterday's rate cut by our central bank, the Reserve Bank of Australia. Now, importantly, we need to remember what this all means for us as investors down under. It basically means that growth sectors have gained the nod to put their foot on the gas, particularly real estate, technology, stocks, as well as banks. Of course, these sectors are most sensitive to rate cuts. Let's just speak about banks and why I believe banks are probably the sector that stand to benefit the most from the RBA rate cut. And it's not just you or I, it's not you or I who really benefit from the rate cut yesterday, but we'll get to that in a sec. But the reason I'm just highlighting that banks stand to benefit is because in Australia, we still have a 325,000 home shortfall ahead of Australia's target of producing homes by 2029. Now, this is because of building shortfalls and surging immigration. Basically, there's not enough properties, there's not enough property supply. So this means property prices will keep going higher. And the average Aussie punter, meanwhile, the average mortgage repayment after yesterday's rate cut will only drop by $106 per month on average. And the other thing to weigh into the argument is that wannabe homeowners, they're still pretty much out in the cold. They still need to save for 10 years to amass a 20% deposit. That's double what it took in 2010. So all I'm saying is that we've got Aussie household debt at one of its highest levels in history. Aussie household debt, mind you, is at around 216%. It's among the highest globally. But the real beneficiaries of yesterday's rate cut with this scenario that I'm just painting are Aussie banks. So what we've got on the screen are the shares of Commonwealth Bank of Australia, Westpac and National Australia Bank. There are three biggest banks. And the reason we've excluded ANZ is because every time that the big four bank shares have crashed, these three banks throughout history have recovered the quickest: CBA, Westpac and NAB. And what we're showing on the screen is what happened since the first rate cut. And as we can see, bank stocks have considerably moved higher. And this is on the notion that bank profits will return to record all-time highs in about a year. The other thing for you to consider is that after yesterday's rate cut yesterday, it's a little bit beneficial to also consider the property sector down under. We do know the property sector has actually outperformed Australia's share market, and that's something for you to consider. So potentially do look at not just listed real estate stocks, but also tech stocks and banks that could continue to shine, and that's something for you to consider. For information on the stocks we've covered today, head over to Memo's platform. It's great to have your company.